Greetings everyone. Today we will talk about Civmec, an integrated engineering service provider whose main facility is located in Henderson, Western Australia. So where did the name come from? Well, you got civil engineering, mechanical engineering, put it together, Civmec. Here's a snapshot of Civmec's share price last Friday. The price was 73.5 cents and that implies a 9.2 times forward PE. A quick company summary. Civmec is listed on the SGX main board and is an integrated multi-disciplined construction and engineering service provider to the resource and infrastructure sectors, mainly in Australia. Okay, it's started by James Fitzgerald in July 2009, who founded Oz Group, or AGC, in 1988. Civmec got listed on the SGX on April 2012. Civmec has grown revenues to 430 million Singapore dollars and net earnings to 35 million Singapore dollars in FY14. 5 years since starting, they have executed well with net margins historically above 8%. FY15's revenues are expected to grow 15% and net earnings to grow 14%. As you can see, Civmec has 3 facilities in Henderson, Darwin and Broome, operates in 3 markets: oil and gas, mining infrastructure, asset management and integrated services. They have sequentially added 8 disciplines and are continuing to do so. They are heavy engineering, modular assembly, structural, mechanical and piping, site civil works, precast concrete, industrial insulation, offshore logistics and maintenance. The Henderson facility is the largest of its kind at 120 square meters and is the only one of its kind located at waterfront access for larger, more integrated modules. Now, they have 2 satellite facilities in Darwin and Broome to facilitate works closer to bigger projects. Here is a map showing their locations. And here is a timeline of their journey to date. Now that you've seen the timeline, I've taken the liberty to transpose the timeline data onto this revenue map. The white boxes denote the capabilities developed. The black boxes below show the facilities built. Blue bars show historical revenues by quarters, while orange bars are forecasted revenues. Revenues are expected to increase 15% year on year from site civil works, precast work, and small-scale insulation works starting in September 2009. They have commenced delivery of vertical package projects in December 13. You can also see that revenue is expected to increase 15% year on year as well, looking at the yellow bar forecasts. The investment merits are as follows: ability to generate higher than average margins above 8%, competitive advantage with the only large seafront facility of its kind in Henderson, Western Australia, with a high quality business management system. In 5 years, they have shown ability to sequentially integrate new capabilities over time, including the ability to deliver subsea fabrication work. High base of oil and gas and mining CAPEX and increasing operational expense and maintenance market, coupled with the new historically unprecedented new infrastructure growth package by the government, provides a healthy sea of work in the medium term. There's experienced management, and management has already guided that the first half 15 revenue flows will be similar to second half 14th elevated levels. That provides conservatively visibility for a 15% increase in revenues year on year. Taken together, we peg Civmec to 10 times forward PE, which is conservatively on the lower end of our comparables. Based on the forecasted 8 cents EPS, that implies a target price of 80 Singapore cents. What is leading to increased business and above average margins of 8%? Okay, there are 3. Large seafront facility, state-of-the-art, fully integrated business management system, and a history of strong project finishers with a tendency for innovation. To see more details on Civmec, please see our webinar or download our report. which comprehensively details their 3 competitive advantages and gives an analysis on the mining, oil and gas, and infrastructure outlook in Australia. Thank you and see you again next week.